I mean, unless it was this is just my opinion. Everybody has different opinions, right? But unless it was like if it's a short-term loan, like for example, if you're doing like a fix and flip loan, I know fix and flip loans aren't usually variable, so it's a bad example. But if you're like doing a bridge loan or a short-term financing situation where you know for a fact you're only going to be keeping that loan for 1 to 3 years, I think an ARM would be great, right? I don't think they're great for any other reason. And the reason being that here's what people don't know. With ARMs, people tend to think like, well, rates are going down, so that's good. So that means my payment's going to get down as when the ARM kicks in. And that's not true because it's based off of a different index.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Ian Anderson, is a mortgage broker in Tampa, Florida. You can find him online at fishermanmortgageservices.com or on Instagram at mortgagefisherman. Ian,
You
thanks
got
for
it.
taking the time today.
Absolutely, man. It's a pleasure. Good hanging out with you, brother.
Now, when we talk about Tampa, Florida, this is an area I mentioned to you before hopping on here. I'm personally really love the Tampa area. I've even thought about moving to St. Petersburg a couple of times. I'm still thinking about it. How'd you end up in Tampa?
So I ended up moving to the Tampa Bay area when I was just a kid. So I'm from South Jersey and right outside of Philadelphia. And I moved here when I was about 10 years old. I lived in this area, like technically Tampa Bay area, more like Sarasota, Bradenton. And I've lived here pretty much my whole life. Went to college in Orlando, so went to UCF, and now moved back to St. Pete. So like just saying, St. Pete, probably one of my favorite places in the world. If you're like, I know we said this before the show, but I'm just going to reiterate it one more time. That's probably my favorite freaking place ever. You can't see it, but there's a sign that says St. Pete, Sunshine City. There's a little picture over there. But I lived there for a minute. It's a good place. You love it,
Let's
but that's
dive
okay.
in there because so a lot of people who I mean, if you're familiar with Tampa and St. Petersburg, then you know. But there's folks, I would throw myself in this picture even a year ago, who are not familiar with St. Petersburg. What's the vibe like in St. Petersburg?
I would say the vibe is it's very relaxed, very low key, but not sleepy, right? Like it has a strong sense of community, and they call it the Sunshine City because it's like the one place that gets the most sunshine per day than anywhere else in the country. And everything there is just very green and vibrant, and everyone just seems to be in like a good mood. I don't know, man. Maybe it's just me being crazy, but the vibe is just always great. I always love going. That's always like when we go on date nights, me and my wife, we always go to St. Pete. That's just like our spot.
And when we talk about Florida, there's so many parts of Florida. I mean, people will may immediately jump to South Florida, Miami, Fort Lauderdale. But from what I understand, that's like a night and day difference from what you're talking about out there.
100%, dude. And Miami, South Florida, that's like New York City, right? Like we're a little bit more low key, laid back, not as crazy, but not like we're out in the middle of nowhere. I'm a big Southwest Florida fan. I'm telling you.
I want to ask you specifically about investment opportunities. So, for folks who are looking at that west coast of Florida, they're looking at Tampa, they're looking at St. Petersburg, and they'd like to get started, with some type of small single family investing or 1 to 4 small multifamily. Are there areas outside of Tampa or in Tampa or in St. Petersburg where you're seeing opportunities, or where investors are seeing opportunities? And then I'd also follow that up with, is there, an urban sprawl happening where these areas are getting larger, so you're seeing more opportunities around the circumference of these cities as
Yeah,
well?
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
absolutely, 100%. I'd say some of the biggest areas that I'm seeing start to blow up around here are areas that are south of Sarasota, right? So things like Northport, Venice, Punta Gorda, that whole area, Charlotte County in general, there's still a lot of land, there's a lot of development. And the urban sprawl from Sarasota is going outward, right? There's not much room for it to sprawl to the north, because to the north, they have Bradenton, you have St. Pete and Tampa. It's going south very, very, very quickly. Matter of fact, I just read something. Ryan Serrant, Serrant, sorry, I always pronounce his name the wrong way, but he just came out and said that he believes that Southwest Florida is going to be the next mega city. I just thought that was interesting.
Yeah.
But there's a lot of land, a lot of opportunity for growth. Now, for areas where there's opportunities for investing, I mean, I think St. Pete has got a big, there's a lot of multifamily homes there in St. Pete. There's also a lot of single family homes with ADUs. So, AKA, if you own an ADU as accessory dwelling unit, it's a mother-in-law suite. So I personally know a lot of investors who will buy these homes and they'll rent out the single family home, and they'll also rent out the ADU in the back. I see a lot of that in St. Pete. I see a lot of it in Bradenton as well, around that area. But the urban sprawl to the north, you're going to look at areas like Pasco County, Brooksville. You're going to look at Spring Hill, stuff like that. Like, that's where I'm starting to see a lot more development and a lot more opportunity.
Now, for folks who are looking at, well, do I start with a year-to-year lease? Hey, do I go into, short-term rental Airbnb, or, do I look into some type of additional setup? You mentioned, an ADU, accessory dwelling unit, and they're getting, some level of scope creep and trying to figure out, where exactly do I start? Do you see more investors in one asset class than another? Are you seeing a lot of fix and flipping happening, or is it a mix across the board?
Yeah, so I'm seeing a little bit of a mix across the board, but it all depends on the area, the specific area. So I'd say keep an open mind and look around. If you're going to look for anywhere that's near the beach, right? Anywhere that's near the beach, that's going to be short-term rental 100%. Like, there's really going to be no long-term rentals over there. So if you're looking at a little place near the beach, that's the route you're going to go. I would say pretty much everywhere else, we're seeing single-family home regular rentals. And then the fix and flips, as horrible as it is, we just got hit with a very bad hurricane 2 years ago. About a year ago, actually. Jeez, not that long ago. But we got hit with 2 hurricanes back to back. So there's still a lot of flood damaged houses that are just abandoned, that have been on the market, and a lot of investors are buying it and they're flipping it. That's big. That's probably one of the biggest things we've seen in that area, specifically more towards South Tampa or Northeast St. Pete. So we're seeing a lot of that as well. But for me personally, everybody's got a different, strategy. I probably would start with annual rentals. I just feel like managing a short-term rental, if it's like your first investment in an area, is a little risky. I mean, it is.
It
You
is.
can get a higher return for sure. I would start there, and then once I understand and know the area a little bit, then I would probably branch out, get some short-term rentals.
I'd like
That's
to
just
ask
me.
you some granular questions, get into the weeds a little bit here. And this is, of course, 1,000-foot view, so it's hard to say exactly. But for new construction, is there a lot of new construction happening in these areas or around? Are you seeing subdivisions go up in a lot of places?
Yeah, a ton. So a lot of the areas we're seeing. So if you look at them, it's hard because I guess whoever's listening to this, if you could pull a map up and look, and you go down to Manatee County, pretty much everything east of the interstate and north of Manatee County, all the way to Tampa, is a bunch of new construction going on there. Anything east of the Tampa Bay ton of new construction. Not a whole lot of new construction going on in Pinellas County and St. Pete, and a ton of new construction going on south of Sarasota. So if I, that's what I'm seeing.
If you're looking for consistent, high quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Now, do you know roughly like what the entry point is, price point for those homes? If someone wanted to get a more cost-effective starter home, but brand new, what would they be looking at in those areas?
Yeah, I would say we're looking probably like around 350,000, three hundred
Okay.
twenty-five thousand for a starter, like a basic starter home.
Yeah.
Um, if I were going to buy somewhere personally that I wanted to start a family and I was going to live there for a long time, I wanted a good deal, but a good area that's going to develop and get bigger soon. I would be looking at Northport. I'd be looking at Venice, and I'd be looking at, Port Charlotte. All of those areas are a lot more affordable because if you're looking at different markets, if you're looking at St. Pete and Tampa, night and day compared to Northport, Venice, and Punta Gorda and areas like that. You really can get a sub $350,000 starter home that's in really great shape.
Now, you mentioned earlier this idea of, if you're investing, specifically in St. Pete, that these are most likely going to be some type of a short-term rental. But then I would juxtapose that with, there are, you mentioned developments happening and subdivisions going up around these areas as well. Are you seeing that a lot of the investing is happening from folks who are in Tampa or in some of these areas themselves living there? Or are these investors from potentially other parts of Florida or from other parts of the country?
I'm seeing a little bit of both, honestly. I'm seeing a lot of investors that are all over the country that are investing down here, and I'm seeing a lot of investors that live here that are buying properties like that. I see a lot of, I don't know if there's any rhyme or reason to this, but a lot of the investors that are out of state are doing short-term rentals down here. So maybe perhaps they have a little bit more experience, to look for. But typically I see people who are buying here, who live here, are buying more single family homes. People who are buying from out of the country, obviously from other parts of the country, are doing a little more of the short-term rental stuff.
I'm sure there's people out of the country here too.
There's
I mean,
probably, yeah, I mean, there's some of that too. I don't get a lot of that, to be honest with you. I've heard a lot about it, but, um, that's definitely still going on for sure.
I would like to pivot a bit here and ask you about folks who are looking at getting into investing, and they're looking at some alternative loan products, including DSCR, but specifically when it comes to small multifamily. So, when you're talking about duplex, triplex, quadplex, my understanding is that it may potentially be easier to qualify for DSCR loans if you're looking at small multifamily because you are able to prove more income because there's more doors that counts towards your income. Is that off base or is there some
No,
validity?
that's completely true. That's completely true. It would be easier because you could use the rent of all of the units. Now, the easiest way, in my opinion, and I say this all the time. If I got into this freaking like 15 years ago, which I wish, if I could get a time clock and turn time back to when I was like, I don't know, like 19, 20 years old, what I would do is I would buy a multifamily home with an FHA loan, or if you're a veteran with a VA loan, and I would live in one of the units, I'd rent the other 3 units out. I would do that before I even got a DSCR loan. But a lot of people are using these DSCR loans because they don't qualify for a regular FHA or conventional loan. And that's okay. But I would say if at all possible, use a conventional FHA loan, live in it or whatnot. But the DSCR loans, those are really great too because they're easy. They're very easy. There's really not a whole heck of a lot to them, but they
Now,
do make it easier to do that.
can folks use those conventional loans and use the additional doors to bolster their income, or does that
Yeah.
only work in DSCR?
No, no, you can do that with conventional loans and FHA loans too. It makes it
Are are
easier.
are people going in? And I'm not saying I wouldn't say just limiting this to real estate investors, but are folks going in and looking at these other asset classes, small multifamily, from the lens of, hey, maybe I can't get into a single family home, but I could potentially get into a duplex. Is that unheard of, or are we
No,
seeing some of that?
I'm seeing a lot of it. I'm seeing a lot of it. Millennials and young home buyers that are being creative about getting into a home are buying multi-family homes, renting the other units out so that they qualify for the mortgage.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Now, I'd like to dive in here because this is something that I'm particularly passionate about. I think there's going to be folks listening who would like to utilize this strategy. When we're talking about, being able to prove additional income, the first thing that comes to mind is, okay, well, if I'm have two or three doors, that's going to increase the total cost of the home. So is it a wash for me? How much does it really help me versus buying, one home with one door?
No, no, not at all. I think it makes it a lot easier, right? Because uh, the more doors you have, I mean, that's gonna be an extra $1,500, $2,000 a month, right? And let's say the price of let me try to do a example here. Let's say the price of a single family home, if they're gonna buy it, was $350,000, right? And then instead, the cost of a duplex is gonna be, let's say, $400,000 or $450,000. The fact that they're able to rent that other unit out and get an additional $1,700 to $2,000 is way more going to offset the higher loan amount that they're having to get. So I've seen that several times before, and that's why people are doing it, because they're able to get into, three, four doors for the same monthly payment that they would have if they just got into a regular single family home.
Now, for folks who are looking at this specifically, and I would say tread lightly because no one situation is going to be able to apply to everybody,
For
right?
sure.
But if they're looking at, hey, do I continue, working on my credit, saving up a nest egg, looking at that single family home versus, I'm going to house hack effectively and I may buy a duplex, rent out the other side. There does come with that a level of burden, which is now you have a tenant, now you've got to maintain it. There's responsibility there. Do you feel like, you mentioned younger people, millennials and below looking at potentially house hacking. Do you feel like for most people that outweighs the potential detriments of having a tenant, having to, make some repairs? Or is it really like, hey, you've got to want to be a real estate investor or at least have the
Yeah.
capacity to think like one?
Yeah, I agree. Yes. To answer your question, for sure. I don't think that I don't think that that's a great strategy for everybody, but I feel like if you're listening to this podcast, it's probably a good perspective for you because you obviously have gotten an interest for real estate investing and you're trying to learn. 100%. But I think just the average Joe, I mean, they might not do that very well, right? But if you can
Yeah.
do it, then yeah, for sure.
I mean, to your point, I think one of the things that I've heard specifically about short-term rentals, and I've said this on other shows, is if you go into a short-term rental thinking like, okay, I'm going to have this on autopilot. There's going to be a
Right.
cleaner. You're a host, right? And so like if you go in thinking I'm not going to be a host, I'm just going to open the doors for these people. Figuratively speaking, they'll be there. You might not be the best fit because you're going to have to be in communication. Same thing
100%.
if you're house hacking. You might not feel like you're quote unquote, investing in real estate and you got all these doors, but you're still responsible for a tenant. And so that comes with that level of burden. I
For
would
sure.
like to pivot a bit here though, and
Yeah.
ask you specifically about refinances and what we're seeing right now. It looks like rates are coming down, and that's, I think, a good thing for everybody
Oh,
who's
yeah.
on this podcast and listening to this show. Are you seeing people refinancing like crazy right now? What's the energy like out there?
Yes. No, we're seeing a lot of refinance activity, especially people who bought 1 to 2 years ago. Um, if your rate it starts with a 7, it's worth looking at. If we can save you 1% off of your interest rate, and here's the thing, it's different in every state. So if you're listening to this in like Wisconsin, for example, it doesn't need to fall that much because it's very cheap to refinance. Refinancing in Florida, however, if you could save generally 1%, it's a good rule of thumb. It's going to make sense to do it. And we're refinancing primary residences. We're refinancing investment properties. We're refinancing DSCR loans. And of course, we do a lot of fix and flip business. So we're always refinancing those into, it's permanent loans as well for
This
DSCR
isn't
loans.
actually
But yeah.
something that I've discussed, and I guess shame on me because I should know more about this process. But in Florida specifically, what does that process look like for someone who's never refinanced a home before? What's that process look like?
Yeah, so it's quite simply what you do when you refinance for the home is, we go over options together. We have a call. We first off see if it makes sense, right? Everybody's willing to sell you a refinance to make money, but it doesn't always make sense. My big thing, what I look for is I highly suggest that you break even on your closing costs in 12 months or less. So if you're going to save, $200 a month on your mortgage payment, that's great. But if it costs you $10,000, that's not great. Right. So you need to break even on that in less than 12 months. Once we figure out if it makes sense or not, then typically what we do is we order an appraisal, just like when you bought your home. We kind of go through the whole underwriting, probably get some documents and stuff from you. And, we submit those to the lender. And then after we're closed, you start making your payments the kind of the month after next. Right. And then hopefully it's a lower payment. But it's a simple process. It's a little bit of a more complex process, obviously, for people who are rehabbing properties and then refinancing them. And there's some things you got to look out for that, for sure. But for the average consumer, it looks like you're buying a house again, but it's probably half as difficult. It's pretty easy.
Ask you, pivoting again here about ARM loans, and for folks who are thinking about fixed versus variable rate debt. And I know for certain it makes sense when things are coming down, but when things are going up, it can be terrifying, honestly. And we saw a lot of that over the last couple of years. As someone in the space, when might it make sense for someone to look at an ARM loan?
I mean, unless it was this is just my opinion. Everybody has different opinions, right? But unless it was like if it's a short-term loan, like for example, if you're doing like a fix and flip loan, I know fix and flip loans aren't usually variable, so it's a bad example. But if you're like doing a bridge loan or a short-term financing situation where for a fact you're only going to be keeping that loan for 1 to 3 years, I think an ARM would be great, right? I don't think they're great for any other reason. And the reason being that here's what people don't know. With ARMs, people tend to think like, well, rates are going down, so that's good. So that means my payment's going to get down as when the ARM kicks in. And that's not true because it's based off of a different index. So even if the market's better, a lot of the times when that ARM kicks in, your payment is going to go up. And not a lot of people know that because they just think, ARM's going down, so the payment's going down. That's not necessarily what happens once it gets to that point. So really the only reason I would use, and they're not, at least in my experience, they're not priced that much better. You should be able to get a very competitive 30-year fixed interest rate without having to do that. It just, the juice isn't worth the squeeze. You might save an eighth of a percent or so. But yeah, personally, the loans I have on my house is they're fixed rate mortgages.
Yeah, I mean, for me, I've seen it go wrong so many times. You have to, it's like threading a needle. And not just in single family, multifamily got hit like crazy with all the variable rate debt that people took out on syndicators and fund managers. It practically wiped a lot of people clean with the variable rate debt and a number of other factors as well, from rents to cost of materials to increased vacancies. So there's so many different factors that go into that. But we are coming up on time here, though, Ian. Any new projects that you're working on? And then as well, what's the best way for folks to get in contact with you?
So new projects that we're working on right now, we're really going heavy into the DSCR loans. So, one of the things that we provide for free for all of our clients is that when you're looking at doing a fix and flip loan, it's very important that you check all the boxes to make sure that it's refinanceable. So my suggestion, what we're working on is a program to where we would do a consultation with you when you're looking at a fix and flip property to make sure that you don't have any problems when it goes to refinancing that. Also, we're running a special as well to any of the listeners of this podcast that contact us. We're going to do $1,000 off of their closing costs, only for people who refer this podcast. How do you get in contact with me to claim $1,000? You're going to just go to you can go to my website. It's fishermanmortgageservices.com. Quite simply, there's a button on there that says purchase a home, fill it out. You can give me a call as well at 813-400-1013 or go on my Instagram. I put a lot of mortgage related content out there. I hope you enjoy it. I try to provide value however possible. But I'd say go to my website, www.fishermanmortgageservices.com.
Ian, thank you so much for taking the time today. Thanks for coming on the show.
Thank you. It's a pleasure.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.